Listen, Stevon, I was thinking about things earlier today, and the beauty of being in Mexico City, despite it being an enormous city, is that you occasionally run into people. And the other day I was having coffee with Courtney, and then here you are walking by Lincoln Park, and we had a quick catch up, which is a pretty amazing thing in such an enormous city.
Yeah, of course. I mean, I think it's a testament to how vibrant the city has gotten over the last 2 or 3 years, where it really has been a melting pot of different entrepreneurs, not just here locally from Latin America, but also from folks who have been imported from the US as well. So it's definitely one of the things that I enjoy most about living here in Mexico City.
Yeah, it's really transformed. I was here like 20 years ago, and it was nothing like it is now. And seeing all the activity, and even at our recent event that we had, the Launchpad, you could just see the energy. And it was funny because there was founders from all over LatAm at the event. And they're like, man, Mexico City, it's got a lot of energy right now. And so it's fun to be part of that.
Yeah, no, I mean, I think I've been one of the people who've been here, since 2017. So I've seen the rise, the fall, and the rise again of the venture ecosystem. And I think, one of the things that I like the most is Mexico is not only a place where folks are building stuff for Mexico City, but it's also a place where entrepreneurs are coming from the US, they're coming from Argentina, they're coming from Colombia, and they're building stuff for the world. I think it's been a number of happy coincidences where, one, Mexico City was one of the few places that was opened up during the pandemic, and it allowed folks to discover this magical place for the first time in their lives. But also, I think over the last few years, for the better or the worse, folks have actually been able to prove that you can actually build multi-billion-dollar companies here in Mexico. And I think folks are coming here to be a part of that story, and they're trying to share that as well.
I think if I were to say a description of LatAm tech, it would be just what you said: the rise of LatAm tech, the fall of LatAm tech, and the rise again, right? It's a bit of a roller coaster. I think about Latin American, like sometimes they're like more meteoric, and the declines are also pretty cause you whiplash. So let's just say it's not boring.
It's a fun place for everyone to operate.
So you've made a career studying emerging markets for firms like Goldman and the IFC. What sparked your interest in learning about these markets and entering LatAm, specifically on the venture scene here?
Yeah, no, I think for me, even as a kid growing up in the Bahamas, I'm from Nassau, I've always been incredibly curious about how to improve the economic trajectory for emerging markets. I remember when I was a teenager, I always asked myself, governments around the world would always be very frantic around whether the majority of their populations have access to finance. Why not just print more money to be able to give folks access? And obviously over time, I realized that you can't do that because that would cause a number of other terrible impacts. So for me, I think it really started with this level of curiosity as a kid. And I knew that ultimately I wanted to focus on emerging markets. Didn't know quite where I wanted to focus, but I knew that I needed to go someplace where I could be able to develop a very strong foundation in finance, to be able to take those resources to be able to make a difference. And so for me, going to the Goldman Sachs in New York investment banking was probably one of the best places at that time to learn about international business, to learn about different financial tools and how companies can be able to get access to that, to be able to improve their circumstance. While I was there at Goldman, I started to do a lot of work in renewable energy. So we had taken the first smart metering companies in Germany public. We had done a number of cross border deals. And I began to see the early adoption of renewable energy and realized that that's probably going to impact emerging markets that much more than countries like the US, countries like Western Europe. mainly because when you think about a lot of those emerging markets at the time, they have between 8 to 10 hours of power outages on a daily basis, which, at a fundamental level, does a lot of things to negatively impact productivity. It also does a lot of things in terms of impacting whether a child can go out and study at night to be able to get a better education. And I think for me, that piqued my interest. And so that's when I, moved over to the International Finance Corporation. And what we did at IFC at that time, focused on renewable energy, was really through a project finance mechanism, trying to help very large manufacturers, very large retailers to begin the greenification process without having to use the balance sheet. And by coincidence, a lot of the companies that we supported at that time were based in Latin America. Once I began to learn more about the region, I think for me, it was very evident, what a lot of people refer to as this access to finance gap, right? Where even the most established companies in Latin America have a very hard time being able to get equity investments or being able to find credit. And being an overachiever at that time, I told myself that I wanted to figure out how I could make a difference in terms of closing this financial gap in Latin America. And I think that's how the story began. So, fast forward after a few years, went to get an MBA, returned back to IFC to focus directly on growth equity investments for IFC. A year in, my boss at that time, Sean Peterson, decided that he no longer wanted to leave to work at the organization. And I think for me, it was a blessing in disguise because it allowed me to, I think, accelerate learning that I had on the ground in terms of how venture worked in the region. I think it also allowed me to be able to build much stronger relationships in the market to be able to support the development of the market as well. And so at that time at IFC, we were mainly focused on what I would call early stage growth equity investments, so Series B as well as Series C. The best way to think about it is a corporate venture arm of the World Bank, where we were investing in companies that we thought in the next 5 to 10 years would be global players and would eventually be eligible for financing from IFC to receive $100, $200 million check. And so we invested in order to learn about the business models, to be much more agile when it came to providing later stage financing to that. I think the opportunity was interesting because, while 75% of what I did was direct investing in startups, about 25% was investing as an LP in some of the leading venture funds in the region as well. And so I think that gave me a very strong understanding of how both sides of the equation worked. And after 5 years on the team, I decided that, I wanted to try my hand at earlier stage in investing, mainly because, the few Series A deals that we did at IFC at the time, I found that I was much more useful to those companies. I found that, the advice that we're giving to early stage companies truly moved the needle in their trajectory of success and wanted to do that full time. So, about a year and a half ago, almost 2 years, decided to join H2O Capital, where I am right now, to build an office for us here in Mexico City, also to serve as our chief investment officer. And so at H2O, we're mainly focused on pre-seed as well as seed investments within the region.
Now, you mentioned you grew up in the Bahamas. Talk about, you had this exposure to Latin America. What was the impetus for okay, I'm moving to Mexico City, 2017, because there was a big wave of people that moved during the pandemic, but you predated that. So what was the kind of internal conversation like, and how did you land on Mexico City?
Yeah, so for me, when I decided that Mexico City was the place to live, it was a process of speaking with the entire universe of early stage fund managers at that time. And when I say the entire universe, that was probably around 4 or 5 funds, which is funny to think about because now you probably have around 15 funds here in Mexico City alone. But through speaking with those companies and those funds, I began to learn that Mexico City was beginning its trajectory in terms of starting the fintech wave. If you remember back in 2016 and 2017 in the US, you had a number of peer-to-peer players, Lending Club, one of the big names. And I found that even though those companies were successful in the US, the ability to access finance was not as dire as you have here in Latin America. I saw that you had a number of, call it first generation Americans whose parents were from Mexico City. They were beginning to come back here to think about building businesses. I remember speaking to a number of global companies based in the US, and they were thinking about putting up their engineering teams in Guadalajara. And so for me, I think that I saw that there were a lot of early signs around what Mexico City could be from a venture perspective. And so I thought that, if I wanted to make a career in venture, there was no better place than Mexico, where it was really at those early stages. I think from a personal level, I found that there were a lot of similarities with the Bahamas. From a cultural perspective, the folks were very welcoming. Anyone who's been in the Bahamas, you would know that you're walking down the street, strangers would tell you good morning, good afternoon, good night. And I think it's a very similar sense of family and belonging here in Mexico City. So I think it checked the box both on the professional side as well as the personal and social side as well.
Let's talk a little bit about H20. What made you join as the chief investment officer? Can you talk a little bit more about the stage that you invest at? Is there a specific thesis that is driving the investment decisions? Share a little bit more about how that has evolved since you joined.
Yeah, no, of course. So the firm as an institution was started back in 2018. And it really was created with the premise of testing whether there was an opportunity for a new fund manager to be able to scale here in Spanish-speaking Latin America. And also the second test that we had was trying to figure out if there was a necessity to have a hands-on, operationally driven approach from a venture fund manager. And so, what we have done over the last few years is we've thought really hard and long about what are some of the most important things that an early stage entrepreneur would need in order to scale the business from 0 to 1. And also in order for them to be able to get the best type of both operational as well as strategic advice as they were able to progress from pre-seed to seed to Series A and eventually to an exit. And what that means for us is when we think about the three sectors where we focus, fintech, B2B marketplaces, as well as B2B SaaS, we've taken an approach where we've really created a very strong operational advisory board, which essentially includes the who's who of the venture ecosystem. We have folks who have experience in credit underwriting. We have folks who have experience in growth marketing, folks who have experience in launching new businesses. And essentially, these operating advisors, they help our founders to be able to leapfrog in their decision-making process. Because we understand that oftentimes, companies here in Latin America needs to be able to speak with folks who have done it before in order to be able to be much quicker in their decision-making process. I think the second part of how the firm has evolved in thinking about the operational framework is trying to make very strong linkages, not just with other funds in Latin America, but funds in other regions, specifically in Southeast Asia. I think we have a very strong thesis that innovation travels from one part of the world to the next. And Latin America, for us, is about 5 or 6 years behind the curve of Southeast Asia. And so if you can connect a founder with a similar business model in another part of the world, they're able to be much quicker in their decision-making process. But then also, if you're able to connect the head of products or the CFO or the CTO with the similar person who has that role in other markets, they're able to understand what great looks like and be able to be much quicker in their personal development within their roles. I think another thing, which is very, very important for us is having a portfolio of founders within our investment thesis. I think oftentimes when you speak with VCs, not just in Latin America, but in other markets as well, folks try to over-index on the second-time founder, the third-time founder, the person who has been there and seen it before. At H2O, we know that's important, right? Because you're able to de-risk your investment to a certain extent. But for us, it's also important to be able to take a risk on first-time entrepreneurs as well. Because we're very cognizant that when you think about 2015, 2016, and 2017, when there was not a venture ecosystem here, all of those founders were first-time and they still were able to build very successful businesses. So for us at H2O, it's very important to have a very operational mindset, but also to be very, very sure that we're investing in different types of founders, because with that diversity, we're also being able to support different types of ideas as well.
What are some of the signals that you look for if you were to kind of distill it down into certain qualities that jump out at you, and talk more about your decision-making criteria?
So a number of things, I think, and it varies. It varies depending on if we're investing at the pre-seed stage versus the seed stage versus the Series A. At the pre-seed stage, I think one of the most important things to look out for is the caliber of the founder or co-founders, as well as that founding team. We look for folks who have experience in the industry that they are trying to disrupt, or at the very least, folks who have lived the pain of the problem it's trying to solve. I think secondly, we try to find teams who have different types of skill sets to complement one another. For us, having 2 or 3 co-founders is a very positive sign, right? Because that's a group of people who can be able to exchange different ideas. And we know that building a company is very hard, but building a company as a solo founder is probably even 10 times more difficult. I think the second thing that we look for are founding teams who have a very strong desire, one, to learn new things, but also to seek feedback, not just from investors, but from other people in the ecosystem. And I think the third thing, when you think about the founding team, what we try to really dig deep on is how good they are in terms of inspiring other people, because throughout their journey, they're going to have to inspire investors to be able to give them additional capital. They're going to have to inspire new employees to join them to continue to build upon their vision. And they're also going to have to inspire customers to be able to buy their solution. Beyond the construct of the team, when we look about and think about the market, we try to find, markets that are fragmented. We try to look at markets that potentially have the ability for companies to be able to have at least $100 million in revenue. We look at markets where there are examples of success in more mature venture ecosystems, because 9 times out of 10, if a similar business model has been developed and scaled in another part of the world, it could work here in Latin America as well. And then finally, I think for us, it's very important to be able to truly be very focused on our 3-pronged approach. So investing in fintech, investing in B2B SaaS, and investing in marketplaces, because we spent several years trying to build expertise in those areas.
I have a question for you, because you've been on both sides. You worked at the IFC, where you were deploying capital into funds as part of your direct investing, and then LP in emerging managers. Right now, we're entering into a slowdown, right? This is a cycle. Maybe there was a bit of over-indexing in venture for a lot of the LPs. But the conversation I was having the other day with other investors is, it's kind of mind-blowing to me that the LP community pulls back in a moment when there's less momentum, and then they invest a ton when valuations are sky high. And so is the explanation that it's just we're irrational beings? Warren Buffett has been talking for 30, 40 years about investing in down markets. And is it just really hard to do? how do you see the LP community responding in 2023? And what's your kind of prediction about, and maybe how has that accompanied the pace of investing for H20?
Yeah, I think the downside of being multiple stages removed from what's happening on the ground, and I view LPs of being multiple stages removed from the ground, is you're a bit reactive versus proactive in terms of your investing approach, in terms of the themes that you are looking for from a fund manager, and also in terms of the geographic preference that you have as well. I think at the same time, when you think about the construct of LPs, especially those who are investing in Latin America, 9 times out of 10 they have very global portfolios, where Latin America is a very, very small portion of that. It's also a very new portion of that as well, and so naturally they're going to be very reticent when it comes to investing in this region. And typically, whenever there is a sign of distress, that capital dries up, which, as we know, has multiple ripple effects, because if fund managers aren't able to raise capital, then they aren't able to deploy it as well. With that being said, I think that there are a number of LPs who have created their strategy being very focused on thinking about how to invest in emerging fund managers. I'm also thinking about investing in those fund managers who have contrarian theses, and investing in fund managers who are going to eventually deploy capital to either entrepreneurs who are traditionally underrepresented, or to populations that have traditionally been unlocked from technological innovation. I think as those fund managers continue to have outsized returns, then additional LP capital will be attracted to those areas. But it's going to take time. I think about, at IFC, when, I joined back in 2017, 2018, they were pretty much only investing in second and third time fund managers, right? Because those were the deals that were going to get past the investment committee. They also had very high thresholds in order to be able to support companies. And once they were able to have good results, they were then able to make much riskier bets in terms of investing in first-time fund managers, investing in fund managers who had much more specific and verticalized approach, as 100% climate or 100% logistics or 100% agriculture. And so for me, I think, yes, LPs needs to be there, especially in times like these when you have question marks in the venture ecosystem. But at the same time, they also have their own investors. They also need to be able to show returns in order to raise a new fund. And so for them, being able to have this balance where they're investing in X% of safe bets to then be able to invest in Y% of new opportunities, I think is the formula that most limited partners are taking these days.
We could talk a lot about the venture game and the kind of current state of affairs, but I think it's an interesting thing to double click on, which for the audience that doesn't know, you're about to venture into your next thing, which happens to be a startup. So most times you see the evolution of founders become investors, and occasionally you'll see investors become founders. What's your thought process in terms of scratching the itch of going back and building a company? And tell us a little bit more about what you're working on.
Yeah, no, of course. For me, I think when I think about everything I've done over the last 10 to 15 years, I think the one common denominator that connects all of them was this necessity to be able to have a very strong level of impact through access to finance. The reason why I decided to join IFC the first go around was to be able to bridge the gap between Latin America and the developed world for large companies to be able to raise money, to be able to expand their businesses, to be able to enter new market opportunities. The reason why I decided to become an early stage investor with H2O Capital was essentially to be able to pick very hungry founders who wanted to make a difference in the world and being able to equip them not just with capital, but with strategic advice in order to achieve their dreams. And when I think about, what I'm going to do next, which essentially is building a neobank for the Caribbean and Central America, I see it as also following that trend where when you think about these parts of the world, they have been locked out of the technological innovation for a number of years. Just to give you quick stats, globally, there are around 350 neobanks that exist with market capitalizations of close to $200 billion, yet none of them exist in these regions for a number of reasons. One, you don't have venture funds that are 100% dedicated to Central America and the Caribbean. Two, when you think about the talent that exists in the region, despite there being incredibly smart people, a lot of them have seen a lot of successful tech companies built from scratch and have successful exits. And I think the third thing is when you think about the game of venture investment, it usually is to drive capital to the markets that are as large as possible to be able to get a very small market share, and hopefully you have $1 billion plus exit. I think potentially in markets that are underrepresented, that are traditionally smaller, the VC mindset has to be changed to a certain extent, right? Because you're probably not going to have $1 billion plus business with 1%, but you will have $1 billion business with 5%, 10%, or 15%, which in my opinion, I think is much easier to get in the underrepresented market because you have much limited tech competition and also the traditional businesses are underfunded. So for me, the next step really is to dedicate the next 10, 15, 20 years to figuring out how I can be able to provide access to consumer as well as SME financing to folks who reside in the Caribbean and Central America.
How do you think about the challenge of when you think about fintechs in general, there's regulation that you have to deal with on a country by country basis, right? It's one of the challenges that I think a lot of founders have when they think about Central America, right? We've invested in Cubo, for example, which they're from Central America and they started in Panama as their first market in payment processing. But there's challenges of expanding to new markets because each market has its own regulation. So when you think of a neobank, and you look at the aggregate value of all those markets, it's quite interesting and quite large. But is the friction the opportunity, or is it the barrier that is going to make it challenging and make it harder to raise capital?
I think it's both. I think that if someone is successful in raising venture funding for these markets and they're able to show early traction within a short period of time, it's going to be relatively difficult for new entrants to enter the market, just because there's a limited pool of capital that's going to be dedicated for this part of the world. Unless you have more local fund managers who have a very strong thesis to invest in the region. I think, yes, regulation is a question. You have multiple countries throughout the Caribbean, as well as Central America, about 4 or 5 different languages that are spoken. With that being said, a number of these governments in the region are really, I think, proactive in terms of trying to attract technology to their regions and attracting venture capital. You think of El Salvador, which in my opinion is one of the most advanced, where they're trying to create a digital hub in the country so that they can be able to attract new entrepreneurs. And I think they're doing this because they understand that without access to the finance, without new technological innovations, their economies won't be able to grow as quickly as they expect them to. You think about the low penetration of credit cards that exist in this part of the world. It's staggering and even lower than what you're seeing in Brazil as well as in Mexico. I think also, beyond revelation, once you're able to crack that, I think is understanding what is the correct business model to follow. Typically, when you think about building a digital bank, folks are going after the inter-exchange fees, which obviously is capped. And in a market that is relatively smaller compared to Brazil and Mexico, there's only so much in payment volumes that you're going to be able to get. So I think the winning formula in these markets, once you're able to crack regulation, is thinking about how do you create an entire ecosystem of products. One that's focused on financial education. Two, that obviously is focused on being able to get access to credit because that's what people want. But I think the third part also is how do you begin to think about creating a higher level of trust between a financial institution and the consumers, where folks aren't just thinking about banks when they want to be able to get a loan, but folks are thinking about banks as when they have any type of financial question, their banks will be there to be able to give them advice and help them on their financial journey.
Given that you've sat in the seat as an investor and now moving to the other side of the table, how do you assess the partners that you want to work with? What is the criteria you use to decide, I want to go all the way with XYZ fund or investor because of these qualities and characteristics that I admire? How has that changed when you think about it from a founder's perspective? Or maybe it's the same, but what are the qualities you care about?
Yeah. I guess before I talk about the qualities, I think a lot of founders make the mistake of getting venture capital funding too early. I think that there is a benefit of being able to raise non-venture funding for your first round at the pre-seed to be able to develop a strong level of traction and proof points to then have a much easier conversation and being able to raise at a much better valuation because you actually have proof points and customers as well as an understanding of the business model. I think when it is time to think about venture funding, for me, I think the most important things from a partner is one, understanding the investor who is not just there to make money, but actually there to provide very strong hands-on support. I think that's important because no one knows when hard times are going to come for a founder. And it's very difficult to understand how investors are going to act when companies aren't meeting their KPIs, when competition is getting much tougher, or when you have very short run rate. And I think the last thing that founders need are investors who aren't understanding and who are just focused on the numbers and not focused on the personal development of the founder and the founding team or the personal development of the company. So for me, I think it's this combination of, yes, they're there for the economic upside, but they also have a very strong interest in the problem that's being solved and are very committed to being able to provide value. I think for something like, what I'm building, which is focused on a region that is very much so underrepresented, it's important to have folks who have very strong ties to this part of the world, because I think they understand the problem much more than other investors because they live it, they see it, they breathe it on a daily basis. And I think, the third thing for me is, it's important to have investors who essentially can be your de facto board of advisors. And I think when you're thinking about having a de facto board of advisors, you're thinking about all of the different skills that you may need to make your company successful, whether that's on the ground support, whether that's support on international expansion, whether it's support on building new products, whether that's just sector level support. And so having folks who have lived it before and seen it before, preferably in other regions that are much more mature, I think also goes a very long way in terms of helping with that leapfrogging and scaling from 0 to 1.
Do you have prioritized geographic focus that you start from? Like when you're thinking about such a vast region with multiple languages, et cetera, do you think of an anchor market first? How do you systematically approach it as to not boil the ocean?
Yeah. I mean, I think like there are two ways to think about it. I think the most common approach that most startups have tried to follow is you start with the largest, potentially the most profitable, and you try to conquer there, and then you scale the other parts of the region. I think starting with the largest market is only important if you believe that there's going to be a threat of new entrants. You want to be able to capture as much market share as soon as possible to make it harder for other folks. I think in a place like Central America and the Caribbean, you won't have a threat of new entrants. And so it's probably better to take approach that many marketplaces have followed, where you start with a small market where you believe you can get a relatively large market share as quickly as possible, where you're able to test many different types of models, where you're able to fail quickly if necessary, and then reiterate. And then with the learning, you start to go to a larger market, and then the most largest market in the region. So for me, I think I'm going to start with a relatively smaller size country in the region, so I can be able to learn quickly, fail quickly. And then with those learnings, I can be able to show investors that it is very possible to build a successful business in this part of the world, because there are proof points that exist today. And then with that, go on to conquer some of the larger countries in the region.
Oh, it makes sense. I mean, if you think about the opportunity set from the standpoint of maybe there's a very friendly market where it's encouraging investment and they're promoting it and the fintech regulation is more flexible, or maybe there's a personal tie to the region that you have a deep network. If you find those edges, in many cases, that might make sense instead of just rowing against the current in maybe what could be a slightly larger market to unlock momentum and then identify those proof points. It sounds like that's the approach that you're thinking of.
No, 100% correct. So for me, I'm from the Bahamas. Have a lot of connections in the country. Understand how the regulatory environment looks like. But again, it's still too early to tell. I mean, I think the first step is understanding what are the needs of each of these very disparate countries in the region. Understanding if there is an anchor product that can easily be applied to a place like the Bahamas, and also applied to a place like Guatemala or like El Salvador or like Trinidad and Tobago and Jamaica. So I think that's step one. I think that's very important, because I think a lot of neobanks have made the mistake of having a 100% credit-led approach, which in my opinion is a potential commodity product, right? Anyone can wake up next day and say, hey, I want to lend money to the general public. But I think it's about creating those hooks where you're continuously top of mind as an institution, a financial institution, when someone wants to be able to get a loan. But also you're continuously top of mind whenever a person or an SME is thinking about engaging with the financial services industry. And so for me, if that's stronger in the Bahamas, then I think that's going to be the initial market. But if it's stronger in a place like Guatemala or Trinidad, then that may be the decision to start there.
So it sounds like there's a massive orientation towards impact, right? Do you think the biggest impact you can make is in just building solutions to solve problems for large groups of people? Because as an investor, you can make an impact too. What was the impetus for, okay, it's time to go build? Because I'd love to hear the internal dialogue that took place when you decided to make the move, right?
Yeah. I think for me, I've always felt that there's not a necessity for me to build something. Builds could be a fund, builds could be a company. If I thought that there was already smart people doing it and doing it in the correct way. I think from a venture funding perspective, over the last 3 years, you've had a number of new emerging fund managers with different approaches who've gone on to really have a very strong impact. I think H2O Capital is one of the emerging fund managers where, when you think about what Damian Durada and Mauricio Porras have built over the last few years, they've begun to make an impact where they're one of the first folks from an institutional standpoint to really take a risk at the pre-stage part of a venture in investing. When you think about growth equity in Latin America, in Brazil, you already have a number of leading growth equity funds. A number of the early stage funds have gone on to create opportunity funds to invest in their portfolio companies, as well as funds in companies that they may have missed over the last 2 years. So for me, it felt that there was already very smart people trying to attack this problem. But when I think about Central America, when you think about the Caribbean, you have not seen that wave of technological innovation. And I've questioned whether you will continue to, would you ever see that unless you have more people who are raising their hands to start to solve that problem. And for me, that was the opportunity where you didn't have a lot of people trying to go in and make a difference.
That's awesome, man. I commend you for jumping in. And I'm also a glutton for punishment because I went back after building a company and I'm building another company and a fund. So it's a double whammy for me where I get to do both, have my cake and eat it too. Well, thank you for making the time to share with us a little bit more about your journey and what your plans are. And I think it's exciting to see. I do think that there's a lot of untapped opportunities in Central America, the Caribbean, and it definitely helps that you came from the Caribbean back home and build. Seems like a very good founder market fit, and you've been in kind of the fintech space for a long time and in finance. And so it seems like there's a kind of strong experience that lends itself to being successful in this. So I wish you all the luck as you jump from being, in that investor chair to the founder seat, which is definitely a hot seat. It's not easy, but it's definitely rewarding.
No, I'm super excited about it. I mean, I think for me, the most important thing over my entire career has been focused on how do I have the most impact as possible through access to the finance. And, whenever I go home to the Bahamas, I see the pain in a daily basis. Whenever I travel throughout the region, I see the pain in a daily basis. And I find that I'm in a unique position where I've developed a lot of resources over the last few years. And it's time to put those resources to good use to hopefully make a difference.
Awesome. We'll be watching. Thanks so much for making the time.
No, thanks for having me.